Ever wonder why a staggering 80% of all day traders throw in the towel within their first 2 years? This question has baffled numerous people in the financial world for years. The world of day trading is a tumultuous ocean, fraught with uncertainty, where the promise of vast wealth coexists with the risk of significant losses. It's a high-stakes world out there, where the markets, as fickle as they are, can turn on you in an instant. The statistics in the industry are hard to ignore as they paint a clear picture of the brutal nature of the game. The numbers don't lie, and they tell a tale of a survival of the fittest scenario, where only the most resilient and adaptive individuals can endure. Bearing in mind the numbers are an accurate reflection of the challenges faced by day traders. A trading journey is a roller coaster ride requiring not just a keen understanding of market trends, but a resilient mindset, and an unwavering belief in oneself, too. Take this into account, approximately 40% of day traders call it quits after just one single month. Imagine the stress and pressure they must be under. Such a high churn within such a short span of time not only highlights the cutthroat competition, but also the immense psychological toll the profession can take. It's like a high-speed race where there is no room for error. One bad decision, one moment of hesitation can cost you everything. And now, let's fast forward 3 years into the future. According to statistics, a mere 13% of initial participants are still driving their trades. A substantial chunk of traders has already left the battlefield, either disillusioned by losses, exhausted by the stress, or lured away by more stable, less risky ventures. Such attrition rate indicates a significant wear and tear that trading exerts not only on one's finances but also on their well-being. 5 years down the line, the scenario gets even grimmer. Only 7% of those brave souls who started their journey years ago are left standing. This elite group of survivors is a testament to their unwavering determination, grit, and excellent risk management strategies. These enduring figures serve as an inspiration to many, a beacon of hope in a world often ruled by uncertainty. So ever wonder why a staggering 80% of all day traders throw in the towel within their 2 years? The journey of a day trader is far from easy. It's a tumultuous, high-stakes game of immense risks and rewards. But for those who weather the storm, the journey can be an exhilarating, albeit challenging path to financial success. 5 years down the line, only 7% are left standing. It's a testament to their courage, resilience, and sheer determination to beat the odds in the face of adversity. Intriguingly, traders have a peculiar propensity to sell winners at a rate that is 50% higher than the rate at which they sell losers. It's an interesting phenomenon, one that paints a vivid picture of the behaviors and tendencies of those involved in the world of trading. This is not just a statistic, it's a testament to the human spirit, a measure of risk-taking and decision-making abilities. This trend isn't an isolated incident, but rather a consistent pattern that has held true over the years. It's a phenomenon born out of countless transactions, a pattern etched deep into the fabric of the trading world. It's an interesting paradox, considering that the objective of any trader is to maximize their profits and minimize their losses. Yet, the numbers tell us that traders tend to sell their winning stocks at a 50% higher rate. That's 60% of sales for winners, a figure that stands in stark contrast to the mere 40% for losers. This skew, this tilt towards selling winners more than losers, is a paradox that's worth examining closer. Is it due to overconfidence or a lack of understanding? Traders riding the wave of a winning streak, or are they bailing out before the ship begins to sink? The answers might not be clear, but what is clear is the scale of this discrepancy and the potential implications for the traders themselves and for the market at large. But this isn't the only pattern that emerges from the data. There's another statistic that catches the eye, a statistic that further showcases the behaviors and tendencies of investors. The average individual investor, as it turns out, underperforms a market index by 1.5% each year. This is a significant figure. It's a testament to challenges that face the average individual investor, the myriad obstacles that stand in their way. The hurdles are many, be it lack of knowledge or lack of resources, or perhaps even lack of adequate tools and technology. Contrast this with the active traders. These are the go-getters, the risk-takers, the ones who are always on the move. They are the ones who live and breathe the market, who make it their business to stay ahead of the curve. And yet, even they underperform, and not by a small margin. Active traders, on the other hand, underperform by a whopping 6.5% annually. However, it's not all doom and gloom. Day traders with a strong past performance have been known to earn strong returns in the future. This world of day trading is a complex and intricate one, where the diligent and the disciplined often reap the rewards of their unwavering dedication, perseverance, and resilience. These individuals, with their eyes fixated on their screens and hearts pulsating with the thrill of the chase, are the ones who consistently beat the odds. Driven by a deep understanding of the market, they use their analytical prowess to make calculated risks and informed decisions. Their study of market trends, distinct chart patterns, and intricate statistical models becomes the compass guiding their every move in this volatile ocean of numbers and graphs. They possess the rare ability to find diamonds in the rough, and most see as market chaos, they see as a coded message waiting to be deciphered. But here's the kicker. Only about 1% of all day traders can consistently turn a profit after fees. This is a sobering fact. However, it does not deter the majority of traders from joining the fray. They continue to trade, to navigate the tumultuous seas of the stock market, armed with nothing but sheer determination and a glimmer of hope. And here's a curious observation. Traders with up to a 10-year negative track record continue to trade. This may seem irrational to some, but it speaks volumes about the inherent allure of day trading. It appears that day traders are so devoted to the game, they'll keep playing even when all signs suggest they should stop. Even when the storm is at its fiercest, they hold their ground and remain unflinchingly steadfast. Profitable day traders are a rare breed, making up a tiny 1.6% in the average year. The rarity of their success story is what makes them the legends of the trading world. Their victories are few and far between, but they are monumental. But they're not idle. They account for 12% of all day trading activity. This percentage is a testament to their industry and zeal. Interestingly, profitable traders tend to increase their trading more than their unprofitable counterparts. It is as if the thrill of success fuels their ambition and propels them greater heights. They are not content with mediocrity. They are always seeking out the next big opportunity, always ready to seize the day. They are the embodiment of the saying, "Fortune favors the bold." They are not just traders, they are pioneers, explorers charting unknown territories in the stock market, their victories echoing in the halls of trading history. The harsh reality is that the average day trader loses money by a considerable margin after adjusting for transaction costs, which is a sobering fact that many novices overlook when entering this high-stakes arena. The financial world is filled with stories of individuals who have been lured by the potential for quick profits, only to encounter substantial losses. For some, these losses extend beyond their initial investment, plunging them into debt and financial ruin. The toll is not only economic. In a country like Taiwan, for instance, the losses incurred by individual investors equate to a staggering 2% of the country's overall gross domestic product. It's an enormous figure that reflects the significant risk involved in day trading and the harsh consequences that can ensue from poor decision-making and a lack of preparation. It's a stark reminder that this is not an endeavor to be taken lightly. So, what's the takeaway from all this? More than anything else, it is that day trading is not for the faint of heart. It's game, a high-stakes endeavor that demands courage and determination. It requires a willingness to face the possibility of loss and the resilience to bounce back when setbacks occur. Moreover, day trading requires a willingness to learn, and not just about the mechanics of the market, but about oneself. It demands an understanding of one's own risk tolerance and emotional responses to stress. It calls for self-discipline, the ability to set limits and stick to them, and the humility to admit when one is wrong. It also entails a steep learning curve, one filled with complex financial concepts, ever-changing market trends, and the need to keep abreast of global events that can impact market movements. It's a curve that cannot be bypassed, as the cost of ignorance in this field can be devastating. Yet for those who are diligent, disciplined, and willing to learn from their mistakes, the rewards can be significant. There are stories too of traders who have made fortunes, who have navigated the treacherous waters of the financial markets with skill and savvy. These individuals serve as an inspiration, a beacon of what is possible when one combines knowledge, strategy, and resilience. However, it's important to remember that these are the exceptions rather than the rule. For each successful day trader, there are countless others who have not fared as well. But for those willing to put in the time, effort, and emotional capital required, there is the potential for success. After all, in the words of the great investor Warren Buffett, risk comes from not knowing what you're doing. This quote encapsulates the essence of day trading. To succeed, one must know what they're doing, must have a solid grasp of the market's intricacies, and the resolve to weather its inherent volatility. It's a message that every aspiring day trader should take to heart.